welcome back. The Chinese government is unlikely to allow a disorderly collapse of real estate giant Evergrande, says Jeffrey Halley, senior market analyst for Asia Pacific at Oanda. Financial markets have tumbled over fears that the Chinese group could collapse with the potential to derail the world's second biggest economy. Let's take a look.
Don't think a collapse is likely, but I think the main problem, or part of the volatility that's been surrounding Evergrande, is a lack of clarity from the Chinese government about what they are going to do or not going to do about it, and that's led to lots of different scenarios being played out. It's hard to think that the Chinese government would allow a disorderly collapse of Evergrande. There would be some knock-on effects in the property development market. So, if you're a highly leveraged, smaller Chinese property developer and you're trying to raise offshore money or even onshore money, you may find that those doors are now closed to you, or the rates that you have to pay to secure finance are so high that it's just not worth doing. So there could be some spillover there. We just don't have this visibility yet as to what or the extent of the tentacles are that Evergrande have in other areas. Now, is it systematically important to the whole world that we have another financial crisis? No, I don't believe it is. I think it can be contained within China. Most of that debt is held in China by Chinese financial institutions. Yes, there is offshore bonds, but that's not where the majority of the debt is held. It's all in China. And as we know, the Chinese government runs everything in China. So I think it's a virtuous circle there, and they'll come to some sort of agreement or arrangement. Although China, the government is happy to send a warning shot across highly leveraged property developers. They don't want to see the property market tank, because obviously social stability is very important to the government. They obviously don't want to see retail investors lose all their money. They don't want to see millions of small and medium enterprise jobs go down the gurgler because of a disorderly collapse. So I don't see that as a scenario. But I can see it being chopped up, either sold off piece by piece, or a big debt equity swap with bondholders, which wipe out shareholders. Something will be arranged. It's a matter of how long the Chinese government's going to let this process play out.
In a statement to Shenzhen Stock Exchange, Evergrande's property unit Hengda said it had negotiated a plan to pay interest due on its 2025 bond, worth 232 million yuan, or approximately $35.9 million. Evergrande has admitted facing tremendous pressure as it tackles a debt pile of more than $300 billion and has warned that it may not be able to meet its liabilities. Financial markets have been hit this week over fears that the sprawling firm could collapse, with the potential to pulse through the world's second biggest economy and possibly beyond.